Week number 40, only 12 weeks left to the end of the year, so we'll be quite a dash when the last 3 months of the year tend to see a lot of liquidity and a lot of volatility in terms of movements. People try to position for next year, people try to take profit, banks try to make loans to get their bonuses topped up at the end of the year, so a lot of movement going ahead into October, November and December. Starting off our analysis with the CFTC report covered by Scotiabank. Last week we saw quite a significant reduction again in the euro longs, and they're near to clear now. So this has been a theme which we covered for probably the last 3 or 4 months. We continue to set EURUSD is going to get cleared those positions out, and we're going to see EURUSD drop. And that obviously happened last week. We touched on to 115. Open interest still quite elevated. What we've seen mostly is new short positions been established while longs are still holding. So there is still actually a little bit more in terms of positioning to work with. GBUSD is fairly neutral and not a lot of movement happened there. There was sizable moves last week in GB, where that was mostly driven by the way the short-term speculators were positioned and they got flushed out because of the risk sentiment. Going to next week, there are 1 or 2 key drivers. We use calendar-based events to figure out volatility. That means you're not sitting on the computer every day waiting for things to move. You're sometimes in the shop and nothing is moving. So we use a calendar, we use news, we find the volatility pockets, and if you follow these videos on a week-to-week basis, you're 70% right on the direction as well. So it's really quite important in terms of saving time and mental capacity to trade and to navigate the markets on a week-to-week basis. Talking about volatility, next event, which is most important to me, next week is the Wednesday RBNZ meeting. Wednesday for us in the unholy time of 2 a.m. in the morning. If you're over in the US, it will be probably in the afternoon on Tuesday. I'm still looking for EURUSD to find a leg lower. Mind you, RBNZ will be kicking off a hiking cycle. They're expected by 2023 to have their interest rates of 2%, and I can't really imagine how EURUSD is going to hold these levels in that scenario. From my experience, when a hiking starts, so when a central bank starts its first hike, people still know there's going to be more to come. The initial move does not get faded. It's really important to know, because a lot of traders love to just fade moves like that. But when hiking starts, the first move is not one you want to be fading usually. So hopefully by Tuesday, Wednesday, we're going to see a sharp move lower. I won't be fading that move. I'll be looking to add to these and then explore lower levels onto that. As the hiking cycle comes to midway or near to an end, you will find that your NZD or the effect of hiking won't be much positive on NZD anymore. It will be more neutral market where they have moved on to a new story. But in the immediate term, that's what I want to see. I want to see EURUSD lower. I want to see NZD JPY higher. And it's a really tricky pair to trade this one, but we like to see this higher, particularly on Tuesday, Wednesday, if that doesn't materialize into the following next week, as I think yields should be supportive in New Zealand. Moving on to dollar, some that's been moving US or the Dixie or EURUSD mostly has been also the positioning or the movement in the short-term rates of the United States. The short-term rates in the United States busted over on a really important level, and that kind of dragged down GBUSD, EURUSD and all the other pairs all simultaneously. What happened last week, though, it came to a level where I felt like this level is not consistent where the currency policy rate is of the Fed. That means that there shouldn't be that much more strength going into the USD. That's why in my own trading group I've signaled that GBUSD should stop about here and start turning, and that naturally happened as well as rates start to normalize again, came a bit down. GBUSD found a couple of handles higher, no, actually just one handle, but 120, 130 pips. I'm still thinking this level is significant. Overall, there is still risk to the downside though, so we are not out of the woods, but will be a more gradual move going forward. Again, I cannot stress enough how important short-term yields are. In 2013-14 was the same thing. Short-term yields spiked out and it kept playing about and kept dropping back, and it actually gave EURUSD quite a big boost. I'm expecting something to happen again. I'll be really keen on seeing where yields move. because right now these short-term yields will only move higher and hold those higher levels once the Fed starts raising rates. And they don't expect it to raise rates until next year, and it might not even happen. So right now seeing these rate moves are really premature, and that means that dollar strength should be a little bit reined in against some of the currencies which are holding their own. That's something to keep in mind. So if you're trading dollar, look at the US 2-year yields. I'm going to overlay this with a Dixie chart just to amplify the effect of it. And you can see more or less all the peaks, all the bottoms are really hand in hand. Right now, the only key driver is short-term yields, and that's what you want to pay attention to. The beautiful thing is about yields is it can't go 100 basis points, I should say, higher or lower. They're very contained, they're very logical. It's a well-communicated market, so moves are more online going to be around, playing about this 0.25 level. So if at any point down the line you're going to see it trades around these lower levels, you know you want to be aggressively long dollar. But if it starts going busting about those levels and then short term, you want to be fading dollar strength, because that will not be in line with the current rate environment. Don't want to labor the point anymore. I think it makes sense to this point. So we covered NZD, we covered short-term yields. There's some I want to talk about. I'm not going to show you this on the chart. It's called US real rates. That means the rates when you take the inflation away. It's becoming much more attractive against the euro. That means long-term, as we move into the next year, you could expect that EURUSD should keep dropping the levels lower. That means you'll be looking long-term, if you're a position trader or long-term swing trader, you are looking for to sell rallies. That means this EURUSD is going to have somewhat more similar move than it had in 2018. Not some that it had in 2014. I don't think we're going to see something like this again, but probably some more close to 2018-19 moves into next year. And I'd like to explore these lower levels below 115, possibly even 110, as the attractiveness of US yields becomes much more pronounced when you pit it against euro. So that's the sort of things I'll be looking at next year. And the short-term NZD strength I'm interested in, and also keep an eye on two-year yields from the US to figure out just where the dollar moves are, because most of the things really move the way based on where yields are headed, based on where dollar is headed. Once you figure those out, you have a good idea whether other assets will move as well. Again, 12 weeks left to the end of the year. Wishing you all a profitable week next week. Stay vigilant. Lots of volatility ahead in the market. I'm hoping you catch one or two trades. That's all from me now, and I wish you a really good week.